NVIDIA. You know the name. It's one of the hottest stocks on the planet, right? But if you look past the headlines, what is the data actually telling us? Well, we got our hands on a professional technical analysis report, and that's what we're going to do today. We're going to break it down piece by piece to see the bull case, the bear case, and what could happen next.
So just look at this recent price action. I mean, the stock has been on an incredible run, pushing right up against the top of its range. And the big question for anyone looking at this chart is, does this rocket have more fuel, or is it about to come back down to Earth? This report gives us the clues to start figuring that out. And look, I'll give you the answer right up front. The overall technical picture, it's strongly bullish. The trend is definitely up. But, and this is a big but, when you dig into the details, there are some really important warning signs that suggest this whole rally might be getting a little tired. And it's that tension, that push and pull, that makes this so interesting right now. To really get a handle on that tension, we have to start with the absolute basics. I'm talking about price and volume. This is the bedrock of pretty much any technical analysis.
Okay, so let's just get our bearings here. The last price shows a pretty solid daily gain. And you can see the stock is trading near the very top of its 52-week range, which, is a clear sign of strength. But the thing that really jumps out at me here is the volume. 131 million shares traded. That is well above average. And this chart just makes that point crystal clear. See, when you see price going up on volume that's way above the recent average, it tells you there's real conviction, real money behind the move. This isn't just the stock drifting higher. A lot of people are jumping in, and that is a classic bullish sign. So with that foundation in place, let's start building the bullish case. What are the key indicators telling us that this upward momentum is the real deal and it's likely to keep going? Okay, first up, we have to talk about moving averages. All these are lines on a chart that show the average price over a certain period of time, like 50 days or 200 days. They basically just help us cut through all the day-to-day noise so we can see the real underlying trend. Now, here's what's so powerful. For NVIDIA right now, the current price is floating above all the key moving averages, the short-term ones, the medium-term ones, and the long-term ones. Think of it like all the traffic lights are green at the same time. It's an incredibly strong signal that the trend is healthy across the board. And this quote from the report just nails it. It's not just one thing pointing up. It's like a whole chorus of momentum indicators are all singing the same positive tune. Everything is pointing to upward pressure, which is exactly what you want to see in a rally. In fact, the report actually boils all this down into one single number, a technical score of 78.41, which is really strong. And you can see why. The components that make up that score, trend, momentum, and volume, they're all flashing green. So the bull case looks pretty rock solid, doesn't it? Well, this is where the plot thickens, because despite all that positive data we just saw, there are some pretty significant cautionary flags waving. Let's look at the signs that this powerful trend might just be running out of steam. I mean, given everything we've seen, the obvious question is everything pointing up? And the answer, maybe surprisingly, is a definite no. And the indicators that are saying, hold on a minute, are some pretty important ones. So let's talk about the MACD. Now, the name sounds complicated, but the idea is simple. It's an indicator that tracks the relationship between two moving averages to see where momentum is heading. And one of the key things traders watch for is when that MACD line crosses below its signal line. That can be a really early warning that momentum is starting to shift down. And right here, this is the central conflict of the entire report. On one hand, you've got that incredibly strong price trend we just talked about. But on the other hand, you have the MACD, and it's actually below its signal line. It's negative. So what does that mean? It means while the price is still high, the momentum behind the price is starting to weaken. This is a classic divergence, and for a trader, that's a big red flag. But it doesn't even stop there. Then we get this number from another indicator called the stock RSI, 100.00. And a number like that has a very specific meaning. It means overbought. It's basically an indicator screaming that the buying has been so frantic, so fast, that the stock might be due for a pullback. It's a sign of exhaustion, like the buyers are getting winded. So you've got this battle, right? A strong trend fighting against weakening momentum. How in the world does that translate into a strategy? What are the actual levels that people are watching to see which side is going to win this fight? Well, it all comes down to these key levels. You can think of them as lines in the sand. Down at 183.76, that's the support level. That's the floor the bulls absolutely have to hold. Then up at 187.99, that's resistance. That's the ceiling they have to smash through to prove this rally can keep going.
So here's how that all rolls into a strategy. For the bulls, the game plan is simple. As long as the stock stays above that support line, the next target is resistance. For the bears, if that support line breaks, it opens the door for a slide down to the next level. The overall takeaway from the report, just be ready for a short-term pullback because of those overbought signals we saw. And this one sentence from the report's summary really captures the whole story. The trend is bullish, the indicators are positive, but that bearish MACD divergence is telling you to be careful. It's a yes, but kind of situation. So let's just recap the big takeaways here. 1, the overall trend is bullish, no doubt, and it's got strong volume behind it. 2, some really key momentum indicators are flashing warning signs that things might be getting stretched. And 3, this sets up the key battle that everyone is watching, strong price versus weakening momentum. And that really leaves us with the ultimate question. In this classic showdown between a powerful, established trend and these clear signs of exhaustion, which one is going to blink first? That's what the entire market is waiting to find out.